This bull market approaching its second birthday. Where do we go from here? Joining us at Post 9 today, Barclays head of U.S. equity strategy, Venu Krishna, has an S&P target of 5,600. Good to see you again, Venu. Welcome.
Good to see you.
You haven't been moved to increase your target like some others?
No.
Why not?
Well, I think let's see what happens in the earnings season to begin with. And if you see what's happening, numbers have been cut quite sharply going in. And what is still anchoring the market is big tech, even though their earnings themselves are kind of decelerating. Then seasonality, right? October historically has been the weakest month, so you don't want to get sort of ahead of that. That said, we are still optimistic. It's just that I think that we have an upside case of 6,100. And of course, we also have a downside case, but we think upside is relatively more likely than downside. So I don't see any point in chasing the market at this point when valuations are really quite full across the board.
We're within about 1% of all-time highs on the major indices, but the only Mag 7 at 52-week highs or all-time highs is Meta, really. You don't think the market's broadened out at all?
Well, the market, in some ways, by some metrics, has broadened, right? So instead of only 25% companies beating the S&P, now it's about 40%, which is quite decent. And the broadening in earnings is also taking place, but incremental. But the reality is the anchor for the market still remains big tech, which is essentially a conglomeration of just 6 stocks, right? And their earnings growth, despite moderating, is going to be more than 4 times that of rest of S&P. So I think that's where we sort of shake out.
Do you think, I won't ask you whether 50 was a mistake, but would you expect 50 again?
No, we don't expect 50. I won't opine on the fact whether it was right or wrong, because you can always do Monday morning quarterbacking, right? So clearly they were focusing on the labor market and they wanted to be preemptive, and they have a lot of wiggle room, right? Because inflation is coming down, so they have a lot of flexibility. That said, we don't think it's unlikely that they go ahead with 50 more. It's going to be probably 25. Yeah.
Are bond yields going to be a headwind if we stay higher for longer now?
We've done a lot of work on that. Interestingly, bond yields start really becoming a headwind once they're coming closer to the 5% level, right? So you could well have a situation in the 4s where there's a positive correlation between equities and rates. And that's because look at what's happening on growth right now. Yeah. The economy is very strong. Inflation is decent. The job market is strong. The wages are going up, right? So anywhere you turn, things are okay. So I think the near term, you can expect a breather because I think we moved too fast, too soon. It's
not everywhere. It's been so confusing as to come on every day and talk about the economic signals because a lot of the data points are coming in good, sure, but manufacturing around the globe is pretty weak. We haven't seen expansion there in several months. And, we'll have more on Pepsi later in the hour, but not painting a pretty strong picture of the U.S. consumer or the global consumer, especially at the low-income level. So it's sort of confusing.
Yeah, it's a mixed bag. So I think you're right about manufacturing. But reality is the U.S. economy is 70% services, only a third manufacturing. So that makes a difference. Services side is pretty strong. If you look at services PMI, they're extremely robust, right?
We just 18-month high.
Right, yeah. Right. And if you look at employment, the same story. It's weak in manufacturing, but very strong in services. On the consumer side, I agree with you, but it's a mixed bag over there. So those companies which have more of a brand or have some pricing power are able to hang in there. But a majority of them are struggling. In fact, we created a basket of stocks which we felt was more exposed to pricing risk, and that is lagging the market quite substantially over the last 3 months. So I think it is a mixed bag on the consumer side, yes.